how strong a price can be. So FinViz is a great website. Usually what I do is I usually look at like futures. Futures is good. And then you can see pretty much like gold. Gold is up right now. S&P is up 88%. The US dollar is low key trying to pull back up. And there's like news on here as well. You can look at performance charts. Like overall, you can see like the opening for like the whole month and whatnot. So right now we got like the S&P uh, SPX 500. Since November, it's been on a continuous uptrend. So buying power is very strong within this market. If anyone was continuously looking at S&P 500, so that's good to use. But right now, XRP is definitely about to do some numbers. I'm trying to make some money while we on this call. Because right now, this is a falling wedge. So before I trade, I always have like multiple different confluences before I take a trade. So I have 4 confluences. So as I go into the London session and look at some London pairs along with XRP, I'm going to show y'all my 4 confluences that I use before I take a trade. And y'all can also use these confluences as well. But this is a great market structure pattern. Having market structure pattern is very important for you to be able to scale your account and catch trends and whatnot. But as you can see here, we have a falling wedge formation. So price is down here at its last support. And overall, if you look at my 4-hour time frame, you can see pretty much a more stronger triangle within up here. So price bought down like crazy over here. So now it's kind of trying to work his way back to the upside, as you can see on this trend line. Let me change this to a different color so y'all can see this trend line. So on this trend line right here, you can see price just bouncing off of it every time. So price is trading within this trend line. So I use trend lines. Trend lines is very important. That's a part of my confluences. So before I take any trades, I'm using the pip catcher system is very important, and to also know the momentum of trades as well. But we're looking for price action. There's a strong area of pretty much like a zone. It's a zone key level, so it's like a correspondence key level. So within this chart, you can see like prices literally playing around on this major resistance line. So this resistance line is here and support lines here because price is touching here multiple times. It's respecting this area. So now we have price sitting back at this area. This right here, we're going to see some either some bullish action or some bearish action. So right now, like you see price being respecting the trend line here, here, here. So now we have price coming back to this trend as well. So we're looking for price to actually break out and go to the upside. So that's going to be a major confirmation. So I need y'all, while I'm marking up another chart, I just need y'all to pay attention. And XRP, just let me know if it breaks. If it breaks the 0.29073. So if it breaks that level, let me know as soon as possible. If somebody can have that on the back burner. Actually, I can pull it up on my phone. Give me a second. All right, here we go. All right, perfect. All right, so Bitcoin It's definitely going crazy. But Bitcoin is consolidating a lot as well, so I'm not really paying attention too much to Bitcoin. But I will show y'all how I get my confluences before I trade. So you want to have confluences. Confluences is also a correlation of market structure. So I have 4 confluences. So what I'm gonna do is I'm gonna copy this, and we're gonna use this. We're gonna use this for GJ. So let's remove all this. So you can do this with any pair. Doesn't matter what pair, what currency, but this is what you do to scale your account. And I'm going to have with the website, this is going to be broken down and more better terminology. Right now, I'm just showing y'all how we do it live, but it's going to be broken down to the new course. This is a great strategy. It's made me profitable just about on every trade. So let's get it. All right, cool. So before I do anything, the first thing I do, I start with my key zones. My key zones is very, very, very important when it comes to trading. So key zones is a representation of just where prices pretty much respecting an area multiple times in a certain area of the market. So just looking at my chart right now, we see GJ's continuously going sideways. It's not really too much bullish, bearish. You know what I'm saying? Just more. It's a lot of bearish within, but overall, like there's no big movements to the upside. It's just playing around between the 150 and the 125 level. So I always do my markups on higher time frames. I never do my markups on no other time frame. So my markups go from right here. So usually when I do my markups, hold on, give me 1 second. I don't know what happened to my text. All right, but so like I said, first things first, key zones. So key zones is a representation of where price rejects a certain level multiple times. So whenever I do my markup for my key zones, I want to see where price is pretty much touching a level in the market multiple times. So a zone is a representation as a ceiling. So the ceiling is where price buys up to a certain level in the market, and then it hits the ceiling and it bounces down like gravity. That's one way you can look at it. It's not no major terminology to it, but it's just a ceiling. So as you can see, my ceiling here, every time price came and touched this area multiple times, it did what? It sold out of these zones. So when you draw these zones, you want to draw them like close on the wicks. So you want to like get closer to them just to see what's going on. So usually I keep my zones within the wick category. So we see price touching in the zone. So we also draw these zones because the average retail trader, they will use a line and sometimes they get faked out because price may broke their line. They may get in for a buy and then they may be holding, but price is actually selling within the zone because it never broke it. It either has to break it to the upside or it has to break it to the downside. So that's the ceiling. So what you want to do with your key zones, you want to mark them up all throughout your chart. So you don't have to go all the way back. You know what I'm saying? This is like the last high. This is the last low. We know that. So we could put this is considered as support and resistance as well. So this is like the last high that pretty much happened. What day was this? Back in December. So we're gonna put this like right here. So that's pretty much a horizontal ray. So yeah, horizontal rate. So, and this is like the last low of the current market. So you see price hasn't really broke none of these highs and none of these lows in the last recent months. And we're still on a 4-hour time frame. So we're just gonna put that there for right now. But we still want to do our key zones. So this is considered as a key zone right here. Let me show you. This is considered as a key zone just because price is hitting this particular area right here as a floor. So a floor is pretty much where, or a surface where anything that hits the floor is going to bounce back up. So it's just a key level of knowing where price is going to just pretty much touch here in this area multiple times. So that's very good. And you want to draw it all the way throughout your chart. All right, so I'm going to just do this for a second. Y'all just watch or ask any questions if you got any questions. All right, so usually I start like on a 1 hour first, but I did start on the 4 hour. But either way, it's fine. It doesn't matter. Um, all right, cool. Let's go back to like the 2 hours. So always do your key zones on a higher time frame, and try to get as many areas as you can. If you can't get every area, what you want to do is you want to use a horizontal ray line. So this line is also acts as a support resistance line as well. But we got the major key zones that we see where price is touching it the most. So within these key zones, there's also like small areas of support and resistance as well. So we see price touching here, here, here. That's a key level. Um, we see price touching along these lines here. Say we moved it up a little bit. So here, 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 here. So that's also a key level as well that we see that's going on. And this is also a key level as well. And then we can go closer to the market currently and see what's going on. Boom. That's a key level where price is touching that, respecting that level. All right, so cool. So now we have our first confluence. We now have to go to the second confluence. So the second confluence is the trend. So the trend is considered as uptrend or a downtrend. So just by having uptrend and downtrend, you want to just be able to understand that where is price going. So I'm still on a higher time frame. I can go to maybe like the 4 hour and do my trends. So this is how I do my trends. I look for where price is touching at the most. So this is clearly a smooth trend line. So there's rules to a trend line. The rules are price has to touch it 3 more times for it to be considered as a trend line. So we see price respecting here in this area multiple times. So as we see price respecting here in this area multiple times, that's confirmation just to let us know that this is a great trend line for price to buy up. So now we'll do the same thing here. We'll draw a counter trend line, which is a trend line that acts as, so this trend line acts as support, just like we have support and resistance in here. Price touched here, touched here, touched here, touched here, touched here. So this is an area of support within our trend. And we see price touched here, and it looked like it made a double top right here. And we'll get closer and zoom in. So now that we have that, next thing you want to do is go to confluence number 3. So confluence number 3 is my moving averages. So my moving averages are my third confluence before I take any trades. So you don't want to take no trades unless you have this done, and then you find your entries. I'm going to show you how to get the entries. So moving averages that I use the 8, the 200, and the 50. The 200 is my white line. The 50 is my little peach line. Actually, let me make sure. Yeah, my 50 is my peach line. And then my 8, you can't see my 8. My 8 is real close on the candles. So on a higher time frame, my 200 acts as also a support and resistance in the market to know where price is going to reverse at or where price can be respected at. So here we see price being respected here. So my 200 came through. What did price do here in this area? Price pretty much respected this as support, and it bought up throughout the market to the next key level. But once price broke through our 200 level, price continued to go all the way down until it found, another area where price was like acting as a level of support and resistance. But really, you want to do this on if you want to know like the overall daily trend, just use it on the daily time frame. The daily works better for the 200 because you can see prices touching here, support, 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 resistance, resistance, low key resistance, 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 support, support. So price is just reacting. So price bought up, it touched it as resistance, shot back down. Price broke through it, retested it, bought up, retested it, bought up, broke through it, retested, support, support. So now it's buying. So that's moving averages for the 200. For the 8 and the 50, I'll show y'all that on the entry moves. So that's what I use for my moving averages. The 8, 200, and the 50. So now the fourth thing you want to look for is your market. Market patterns. So with your market patterns and everything, you have my major market patterns that I use. I want to show y'all this. Like I said, all this will be included on the website. So my major market patterns that I use for me to understand to get in the market is double top, double bottom. So double tops are considered as M's, double bottoms are considered as W's. So just looking at price, we see here we have a double top structure within our zones. So by us seeing a full W shape, we know that price is going to do what? It's going to buy, make two bottoms, which is equal lows. Equal lows. So as y'all can see, this is the first leg. This is the second leg. So the second leg is always your entry. But to be a conservative trader, you want to understand that there's a neckline. So before price actually makes a continuation to the upside where the market is going to continue buying up to the next key level, it has to make a level of resistance for a double bottom. So the level of resistance that it made was right here, perfect key zone. So this key zone was a perfect level for us to know that price was respecting it. So 9 times out of 10, they tell you to get in on the break, or the break was like right here. So if we look very closely, we can see that this is pretty much the neckline right here, the neckline. So as you can see, this is the neckline. This is the neckline. So they tell you to get in on the entry. So sometimes you can size it up to where usually price follow the same leg structure or length, and that could be the actual next length of this one as well. But here we had a lot of movement, you know what I'm saying? Price broke through, retested, 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 and now it's finally buying up. Me personally, I know that you see it hit my trend line perfectly. I'm gonna try to take my entry here just because that's a more valid entry. I usually take my entries on a lower time frame for that second leg just to ride it up for a continuation. And my take profits are literally like, we know my neckline is my first take profit. But we know if price breaks through this neckline, it's going to continue up to the next key zone, which is up here. That's about 684 pips. No, 68 pips on GJ. Or actually, that might be 684. I'm not sure. But I know that I can size my move way better because I'd rather get in down here than to get in on this side. So this is where they're actually sizing it at. This formation, this size is pretty much just being able to understand that once price break the neckline, it's going to be the same length as the first leg or whatnot. So best bet is trying to get in down here and riding it up to the neckline, so where you don't have to be in that traffic whenever it breaks, because whenever it breaks, it's either you get in on a break in the retest, or if you get in on a break, you might, you know what I'm saying, get stomped out and you might lose your trade just by getting in on the break because you don't have a good valid entry. But there's multiple ways to get your entry with double bottom features. Um, the inverse head and shoulders is pretty good. Anytime you see a head or inverse head and shoulders, we know that there's a big spike in price in the downward position, and there's a left shoulder. Eventually, price is going to go back and make a right shoulder, and usually this is more of a continuation of a Fibonacci trade where price buys up, retraces, and then continues to the upside. So that's a good way of getting entries. Um, but there's multiple patterns as far as market structure patterns that I use for my confluence just based on whatever setup I see. But first and foremost, like I always go with these confluences before I take any trades, and that's how I'm able to scale my account. So there's double bottoms here, double bottoms here. It's just the formation. You can see the pattern. Like this is a double bottom, like pretty much which is a W. So anytime I see this W, I continuously to know like, okay, price could potentially buy up. You know what I'm saying? This depends, especially if it's on a support like it is right here. Like it's literally set on a perfect support. Once you see that second leg or that leg forming, that's pretty much of a continuation where you can like get in for the trade and buy it up, you know what I'm saying, to the next key level or whatnot. So that's very important. So now that we have all our confluences, the next thing to do is to be able to find entries. So using triangles, trend lines is very important as well, just because knowing trends, you can be able to get different trades based on whenever price actually breaks that triangle for it to buy up to the next key level. Um, Actually, let me see if I actually have this. So right here. So having triangles is very good. These are my favorite common chart patterns. So just by me seeing these patterns in the market, having that eye candy, I'm able to find entries based off of like ascending triangles, descending, uptrend, which is a channel. Price usually respects, like you see, this is an area of support, support, resistance, resistance. That's because that's a channel. Same thing here. Resistance, 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 resistance. So commonly, some people take trades just off of the trends. You actually can make money from that. That's a good way to enter trades. But you know what I'm saying, you want to look for confirmations like double top features, which is like right here within this area. Just break it down to 5 minute, and then you look for entries like this. They tell you to get in on the neckline. Like I said, I catch my entries at the leg up here, and I'm able to ride my trade all the way out for 100 pips. We're looking for more like with our key zones and our confluences that we use with pip catchers 1K. Um, we're looking for like 80, 90 pips on every trade. So long as the confluences add up, whenever we enter these trades on the lower time frames, we're looking for 80 to 90 pip minimum, and price is pretty much going to continue, you know what I'm saying? Keep buying, or keep selling to the next key zone. So that's why we do that. But you see, like right here, this is pretty much the way this triangle is set up right here on the daily time frame. As you can see, price can react in a certain way, just like how I showed y'all here. So price, we have right here. We have, let's say what kind of triangle this is, and I use these. I look back and forth. We got pretty much like a ascending triangle. To me, this looks more like a ascending where it's flat top base. Then you got a strong uptrend, which is right here, strong uptrend. So we're looking for price potentially to break this triangle. So once price breaks this triangle like it is right now on the daily, you can see like the bullish momentum. We had imbalance right here. If you're part of the mentorship, you'll know what imbalance is or whatnot. But we see that price is pretty much about to break here and continue to the upside. So just by looking at it, what we do is I go down to the 5 minute, the lower time frames, and you can see how we can catch moves on lower time frames. So as y'all can see, like, what is this? This is a head and shoulders, right? So this is on the 15 minute. So like I was saying, market patterns, which is your fourth thing. And also what you have a double bottom. So which is a W. So usually what I do is I take this little line, right here, draw it all the way across. And now I look for price to, you know what I'm saying, respect this. So price can pretty much look like this. So you see a break, and then you see you wanted a retest to happen, but apparently there's not a retest that's happening. So here what happened was price pretty much made a double bottom structure. So as it made that double bottom structure on the 15, even on the 5 minute, you can see it a little bit better. You can see the double bottom structure on the 5 minute. So what you'll do is you'll just take a trend line, small little trend line for the last high, all the way across so that neckline, which is that support, I mean that resistance level. So I could say probably potentially I like doing it like right here. And the reason why I'm doing this is because price is smacking this trend line here and selling. Price smacked the trend line here and it sold, smacked it here and it sold. So now we have the second leg of the W. We're gonna wait for price to actually break through the trend line, and then we're gonna look for a buy, which is a long position. So usually price will break the trend line and then come back and retest it. As you can see, like that blue candle in there is a bearish candle. So that was the actual retest that actually happened. And then we're looking for, you know what I'm saying, price, just for price to even buy up to here, that's like 41 pips. So that's, you know what I'm saying, a cool $400 with the standard lot size. You know what I'm saying? Just by buying it up to the actual key level zone, which is right here. As you can see price buying up here. And our entry is good. You just have to hold it. But you see price broke through and went crazy. So like just looking at that, if you had another take profit somewhere else, you could see price is gonna just continuously keep buying up to these key levels within the market. It'll break structure, retest it, make more double bottoms, and continue to buy up to the upside. Like another double bottom right here on the 5-minute, catch it up, ride it all the way up to the next key zone, which would be in like right here. That's 181 pips. Or, you know what I'm saying, you can take a short trade. You can look for a smaller you look for a smaller support level. So like you can see why price stopped right here is because over here currently in the previous move, you always want to look back at a previous section or area where price is respecting the area. That's going to be like your nearest support or resistance. So like right there, like we automatically could have got in after we took profit over here, got in right here on the double bottom trade, rolled it up to the next level. That's 100 pips. That would have been, you know what I'm saying, a standard loss, $1,000 off of just using a GJ. But that's just a formulation of how it looks whenever you're trading it. So like here you seen like price made double bottom as well, came back, retested, bought back up. And the reason why I use my 8, as y'all can see, this is my 8 moving average, because anytime the 8 crosses my 50, which is my peach, and whatever trend the 8 is going, that is the trend of price. So price bought all the way up, came down, retested, or it broke it. It broke the 50 because my 50 acts as support and resistances as well. So anytime they cross, that's a confirmation for a buy if it's going up. And it also broke, so it'll come back, get close to it, retest it as support, bought back up to the next key level, and so forth. So now, just looking at this right now, any far as major moves, I see XRP is trying to go ahead and make that move. But as far as major moves right now, we have that channel like I showed y'all on this type of time frame. So within triangles and channels, you can actually draw more trend lines. So like channel trends, if you see them. So if you see them more, you can draw them up. And just look for, you know what I'm saying, a wave or where price is touching them at. So like price is kind of iffy in here, but price is touching it. You know what I'm saying? It's respecting it. So this is like a wave. This is a, you know what I'm saying, just a wave of understanding that price can break within these areas as well and continue to the upside. So we see if price is already about to break up here. So once price break my trend line, I'm going to look for a retest. So usually I don't hop in on the break. I wait for my retest. So I look for maybe a double bottom structure or four touches for me to enter a buy after the break. So that's how I'm able to scale my account as well. I just wait for the break, retest where it actually respects it four more times, and then I'll buy it up to the next key level, which will be all the way up here. So that'll be like price is gonna break and then buy all the way up here. But on the 4 hour, you know what I'm saying, we just waiting for that symmetric move that I showed y'all that's happening. So we're just waiting for price to continue buying up or whatnot. So within these channels, so buy, and then you know what I'm saying, we're looking for the break of structure. So like right here, we're looking for the break of structure to happen. Once the break of structure happens, we can actually buy it up to our next key level, which would be like right here. And trading, like I said, once you understand the skill, the money flows in easily. You don't stress about it. You don't over trade. And the psychology is important. The skill set is easy. I don't know what's wrong with my mouse, but the skill set is easy. It's just really based on the psychology aspect of not revenge trading, not getting mad at the markets when trades don't go your way. It's just a matter of patience and waiting for that setup to happen. So that setup has to be a double bottom structure or a double top, which is an M, and a downtrend as well. So like M's are pretty much associated as double tops. I was going over W's, but M's are just association of you know what I'm saying, just price moving downward. So like here you can see a full M structure. Right here, this is the pretty M. You know what I'm saying? You catch it over here, ride it down to a level of support, and that would be crazy entry. You know what I'm saying? 300 pips. And you can do that on lower time frames as well. You can do it on higher time frames. Higher time frames are just more stronger entries. You got to hold for a longer period of time. But yeah, man, drop some ones in the chat, man. If y'all want to make some money, man, drop some ones in the chat. Let me know right now. If y'all wait, y'all sleep out there. Trying to make some more, make six-figure earnings this year. We could do that. I'm telling you, with this strategy, we can do that. We can go crazy. Yes, sir. Let's go. But this is all market structure. Like when the new course drop, like bro, it's gonna blow y'all mind, and it's gonna all make sense. Like from all last year, us going crazy, going hard, to this year, even taking it to the next level, where we're having 10,000 withdrawals from everybody, 5K withdrawals, $1,000 withdrawals, whatever. You know what I'm saying? Just off of market pattern structures. And I use this same exact confluences on gold, and that's how I'm able to scale my account on gold. And just by using a little bit of capital and leverage and practicing on demo until you get it down pat, and you'll go crazy. I'm telling you, you'll go crazy. I know I ain't really been doing calls like that, but I just let me. I got something crazy for y'all. I just need y'all to be studying the material that we already got. But we're waiting for some moves. We're waiting for pretty much a price to react to break this to buy up to the next key level. We're gonna look for a buy entry on GJ. I'm gonna send this chart. Y'all also can mark up y'all charts. We rewatch this video. But back to XRP, because I know it's gonna make a move without me if I don't catch it. All right, cool. So we got price. We got price breaking XRP. Let me go ahead and pull out the bot real quick. Y'all know I ain't pulled out the pip catcher yet. I mean, saving it for last. And by the way, the broker that I use is Eagle FX. I'll drop the link for y'all right now, actually, in the chat. If you don't have Eagle FX, sign up under my link. They give commission on trades. Just to let y'all know, they give commission on trades, which is excellent. So that means you get $4 lot size if you meet quota or whatnot. If you meet quota, you can pretty much get extra $4 on a lot. Say, Vince, you put $1 lot in, they'll give you $4 extra free risk on your payout, and that'll be added to your trades, which is excellent. But let's pull up XRP. I just dropped it in the chat for y'all as well. Y'all can sign up. And they have same-day withdrawals, fast customer service. They're regulated in the Dominican Republic. Very good broker. All right, we see XRP being sketchy. But like I said, you can make crazy money on XRP. XRP is smoother than Bitcoin, honestly. If you can go crazy on Bitcoin, you can really go even crazier on XRP. It's way smoother, and it follows market structure is just so beautiful. Honestly, it's just so beautiful just to see entries. Like this is a perfect M, like right here. This is a perfect M right here. Like actually, this would have been a great trade. That was about shoot. Look at that wick. $214 pips with a standard lot size. That's $2,000 in 2 hours. But like I said, price lock it broke, but it's respecting it. So I need to see some bullish momentum. I never get in a trade just because it broke. That's not formulation of trading. So I'm looking for a break and a quick retest. Might throw a fib on it. Just depending. I just need price to break through. Once price break through, I can take a trade, ride it up here, risk free 100 pips, or even to here, TP1, TP2, and that'd be great trade. But yeah, that's XRP right there. See what y'all see in the comments. Yeah, I'm telling you, Ripple is where it's at. If Ripple does decide to drop down, I'll be happy. But I would love to see a correction and for this to blast off. Because I've seen this is pretty much like a distribution. Distribution is where like distribution is where price pretty much makes a correction, and then it makes after it makes the correction, it makes a impulsive move. So this box method that I use is called distribution. So this is a distribution where it also acts as like low-key support and resistance in a way. Let me see if I can move it. I'm gonna show y'all this real quick. This is just something I just learned. So distribution, this is a very, 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 very good strategy. So this is called accumulation. So in this, it's accumulation and distribution. So distribution is more so is where price pretty much is in a downtrend and then it goes back and it makes a correction. So this is the correction as far as distribution as well. So it goes down, make a distribution where price is supposed to be selling, but it's buying back up. So you don't want to buy back up. You want to catch the sell. The sell could have happened like right here, where price pretty much made a double top, and then you could have at least hold the trade and caught it all the way down to the next distribution. So this distribution where price came down and then started buying back up, could as an imbalance right here, that would have been an excellent trade for another re-entry. So this, you want to trade the impulsive moves, impulsive moves, impulsive moves. So you can either, if you don't catch the double top, catch the break of the double of the structure every single time. This is free game. I'm putting y'all on right now early, but this is more of the information y'all be getting soon. So accumulation is another great one. So with accumulation, you pretty much have a uptrend, correction, which is accumulation, where price is actually selling, and a uptrend. So prices make an impulsive move, correction, impulsive move, correction, impulsive move. So as you can see here, we have the same exact thing. We have price making an uptrend. So this was also a small area of correction. So price made those bottom structures, bought up, correction, impulsive move right here, correction. And now with all these confirmations that I have aligned, just looking for the same thing. So if we can catch this trade down here, early entry, and then actually catch this trade out of this box, so out of this correction box, pretty much it'll be probably like, you know what I'm saying, you want to make sure your correction box is kind of like tight, like a support. This is how you draw it. Right there. It's about the best I can do. So this is correction, and now we're looking for impulsive move to the upside potentially. But if price wants to sell, it'll break through this trend line right here. Like it's been respecting this major trend line, but it's so close. So if price actually wants to buy back down through here, we're looking for price to sell all the way back down to these major support levels that we have, our major support levels that we have in the higher time frame. So potentially, if price wanted to correct itself, it can break through and drop down, keep going down. But we have accumulation happening. Accumulation. This is accumulation as well. And you know what I'm saying? We're just waiting for the move to happen. So once the move happened, I don't know why they just move. It's weird. So yeah, just waiting. That's all. But like I said, if it price decides to sell back down, that would be an entry. But as of right now, there's no moves. You never want to trade when there's no moves. Literally, there's no moves. So there's no point of trading anything just because there's no moves happening. Um, so other than that, honestly, I appreciate everyone for being on this call. This call is recorded. If you're part of the mentorship, you get this video. I'm not dropping this in the Pip Catchers chat just because This is some valid information. But if you're already with the team, y'all already know what's going on. Man, let's go, man. It's 2021. Let's be active in the group chats, man. Y'all work, study the videos, drop the calls. Drop charts, drop testimonials, drop profits, drop whatever, bro. Motivate somebody else beside you because they may need it. You know what I'm saying? So let's get it, man. 2021 will be a great year. Appreciate y'all.